Bitcoin is going through one of the most interesting times we've seen in years right now. Old money, or crypto whales, are finally starting to get rid of some of their stuff. These are people who bought coins when they were worth $1, $5, or $10 each. Many people think that is scary, but let me explain why this is the best thing that could happen for Bitcoin, XRP, and the whole crypto market. We've seen this trend play out in every single bull run and cycle. Bitcoin rips apart, energy levels soar, and everyone feels like they're going straight to the moon. Then all of a sudden it chops sideways. When people are angry, they question themselves and wait too long. We're going through the same thing right now. This isn't advice about money. BTC is up almost 100% from last year to now if you zoom out and look at the 1-year picture. That means that even though the market has been boringly sideways for a year, you now have an asset that has doubled in value. Take a look at that. A 10% gain over a year is a big deal in the real world. Folks in the Bitcoin world say that 99% is dull. You should now understand how strong this market is and how skewed market psychology can become when people give up. Now is where I really want you to focus. Because 99% of retail buyers miss this next part, but if you understand it, you'll have an edge. There are 230 quadrillion worth of Bitcoins on the market right now. Slowly but surely cash is coming in and rates were just lowered. Rate cuts happened last time, and all 10 of the top coins shot up to levels we hadn't seen in years. People seem to forget about that. What took place after that? Joining together, swirling, news stories. What's taking place right now? Now comes the important part. Putting everything together is not the end. It's where the show starts. At this point in the market cycle, we can sell, early adopters can make some money, and big banks can start to buy. You can get all the tools most buyers are missing in one place. Let's look at the things that are making people act in this market again. Some people have a lot of Bitcoin, but not much cash. Take a moment to think about that. They got in early, and now they might have tens of millions of dollars in Bitcoin. But banks still don't lend against Bitcoin like they do against stocks or real estate, so these people can't get cash. What do? They make money. It's not because they don't believe in Bitcoin or think the bull run is over. It's because they need cash. It's the same as the first workers of a new company selling some of their penny stock options when the prices of those stocks went up by a huge amount. They're not giving up on the ship, they're spreading their risk, getting more money, and making their situation more stable. In crypto, that's exactly what's going on with OG whales right now. They're only selling 5 to 10%, just enough to give themselves some room to move. It's being taken in by the market. That's why we're not seeing another parabolic rise right now, but this chops sideways. There is good news, though. In reality, this absorption takes away instability. The mega banks step in when volatility goes down. Banks like BlackRock, which is one of the world's largest, don't want to play in a casino. They want security, an idea of what will happen, and a lot of it. This is where the loop goes wrong. They believe that a sideways market means a dead market. In fact, sideways means the market is getting older. When prices stay the same, institutions finally feel safe enough to invest in crypto at amounts that can change the whole landscape. While some may say that Bitcoin or XRP are boring or stuck, they are missing the fact that the groundwork is being laid for the next big wave. Let's see how this fits into the bigger story. Take a moment to think about where the world economy is now. Rates were lowered recently, money is getting easier to get, and tariffs are making standard markets more volatile. What item do you think starts to look appealing in this situation? One that has limits, is spread out, and is being used more and more by both governments and organizations. And XRP is seen as the oil of the new financial system because it is at the center of discussions about cross-border settlements around the world. But here's the strange thing. When volatility goes down, energy goes down too. And lots of people love excitement. That's why stores get bored and negative just as institutions are buying in secret. The people who make gains that change their lives, they sell when they're not interested, and they miss the boring part of building up that makes the big moves possible. Let me show you what I mean. The CEO of Vanguard has said that Bitcoin is not a good investment because it doesn't have any cash flow. However, Vanguard owns the most shares of MicroStrategy, which is a Bitcoin treasury business. It's not a mistake. It doesn't make sense that way. That is a sign. It's one thing to hear what people say, but the secret allocations tell you the truth. The same goes for BlackRock, Grayscale, and all the other big players. In public, they put down crypto. They're also buying Bitcoin treasuries and building up XRP through private purchases in Ripple in the background. Why? Because they know where this is going. They know that the world will need a digital settlement layer at some point. And right now, Bitcoin as a digital asset and XRP as digital cash for international payments are the two choices that have been through the most testing. And when you put those parts together, you can see the whole picture. Early crypto pioneers are selling small amounts of their holdings. The organizations are taking a quiet role. Stores are bored and busy. The past tells us what comes next. A sharp change in prices when new money comes in. The new players decide all of a sudden that they want to sit down. That's why this is one of the most important psychological turning points in the history of this market, because most people will miss it. In 6 months, they'll think, man, I should have loaded up when everyone else was dumb and bored. If you think about it from the very beginning, it makes perfect sense that Bitcoin, XRP, and the whole crypto market are where they are now. Read about the past. Every new tool that changes things goes through the same stages of adoption. People who believe early on take a risk. They ride huge price swings and get huge gains that change their lives. The asset's instability goes down as it ages, though, and the big players step in. It took place on the internet. It took place with early tech stocks, and it's happening now with digital things. The interesting thing about human behavior is how we often miss the big picture. People love the thrill of daily 50% swings. They love how wild pumps make them look. But organizations love things that are easy to guess. This is exactly what needs to happen for Bitcoin and XRP to hit valuations of several $1 trillion. If there was less wild volatility and more stability, it would be easier for $1 trillion pension funds, sovereign wealth funds, and company treasuries to decide how to spend their money. This is why the OG whale sale is such a big deal. Imagine having something that you bought for a few dollars but is now worth tens of thousands of dollars. Watching that value change by millions of dollars in a week is crazy. In this case, it makes sense for some of those people to cash out a portion. The process is not a weakness of the asset. It shows that you are strong. That shows the market can handle those sales without falling apart, that the buyers can handle whatever the sellers throw at them. That's what a market that is growing means. Get even farther away now. Think about situations on a global scale. The pressure of inflation has been stuck. Governments are dealing with amounts of debt that haven't been seen in generations. Rate cuts are also bringing back cash. When money comes back into the system, it has to go somewhere. Land, stocks, and bonds all get their fair share. But crypto is different from other things. This is the only trillion-dollar asset class that is still new, still not well known, and still has room to grow in value. That is the unequal bet that businesses can't ignore. Michael Saylor used a strong comparison that really helps to make this point. He said that Bitcoin was like a brilliant 7 startup, where early workers got crazy rich with penny stock options but couldn't borrow against them. They had to sell some things. They still believed in the company, though. It means they needed money. The same reasoning works for crypto whales right now. It makes sense to sell a piece, it's normal, and it's eventually good for you. The catch is this: regular buyers get scared when they see whales selling. They believe it is a vote against them. But organizations see it as a chance when they see it. They know that early holders need cash, and they're happy to build up a large stock of it. This is how markets move from early users to widespread use. Let's link this to XRP now. Bitcoin sees itself as digital property, but XRP sees itself as digital cash. The pipes for making payments across borders around the world. XRP needs to be steady, easy to buy and sell, and backed by institutions for it to work. Not only is volatility going down good, it's necessary. What central banks, payment providers, and businesses need is for XRP to settle in a narrower range before they can feel safe, letting its value go through the roof. Take a moment to think about the world's banking system. Every day, trillions of dollars go from one country to another. There are a lot of fees, payment takes a long time, and liquidity is spread out. That's what XRP is supposed to do by being the bridge exchange. And no bank wants to deal with a coin that changes value 30% every day. They want things to be regular. They want dull. That's why moving sideways is so important. It makes it possible for corporations to really adopt it. But the long-term trend is still going up, even though there is consolidation going on. In the past year, Bitcoin has almost doubled in value. XRP has been quietly added to testing environments used by private companies, banks, and government agencies. Even if it's not in the news every day, the base is already there. That's the strange thing about these cycles. For the real moves, there is no noise, just quiet. This is when you need to think about things from the start. A lot of people trust what they've been told. There are certain outcomes and answers that will only work in certain situations. But those ready-made answers don't work when things change, like when currencies fall or systems are reset. This is something that people in Lebanon, Argentina, and some parts of Africa know all too well. You can't depend on old models when your local currency falls apart or your bank freezes your account. You have to make up your own mind. And then Bitcoin and other cryptocurrencies make a lot of sense. That's why chaotic settings are often the best places for adoption to happen. People who have lived through financial collapse, bank failures, and inflation that went through the roof know right away how valuable something like Bitcoin or XRP is. They don't need to be taught. Since they've been through the problem, they can see the answer right away. People who live in countries that are stable, on the other hand, become lazy because their systems look safe, until one day they're not. This also has something to do with one of the biggest mistakes in the market. The same institutions that say Bitcoin and XRP don't matter are quietly getting ready for them behind the scenes. For instance, Vanguard has said in public that Bitcoin is not a good investment because it doesn't bring in any cash. Still, they have the most shares in MicroStrategy, which is a Bitcoin holding company with debt. It doesn't make sense that way. There's a plan there. In public, they try to stop. In secret, they build up. Vanguard, BlackRock, and Grayscale, this is what they all have in common. Dismiss with words, build up with acts. Plus, it's an even better plan for XRP. They're dealing in Ripple in secret, looking into corridors and getting ready for ETF products without telling anyone. That was planned. The less retail is excited right now, the more quietly they can gather. Then when the time is right, they roll out goods that bring in a lot of mainstream capital. So don't pay attention when CEOs say crypto isn't important. Pay attention to what they do. We don't hear about money moves until the news does. That brings us to another important point Saylor made: yield. Check your bank accounts and see how many of them pay you more than 4.5%. Not at all. How about 8, 9, or 10%? Of course, who is that being offered? Nobody. Govs that are stable don't want to. Weak countries can't do it, and companies would rather buy back their own stock than issue loans with low interest rates. What Bitcoin does is fill that gap. Digital wealth that lasts for a long time can be worth a lot more in decades than in years. This gap is what makes institutions change the way they think. They know that the old way of getting yield isn't working anymore. They understand that ties aren't the same as they used to be. They know that every year paper currencies lose value. That's why they want something outside the system. That's why they keep an eye on crypto, even though they play it down in public. This is the important thing to understand. It's not a top that we're in right now. It's not the end. The base for the next exciting leg is being laid in the quiet middle. When stores get bored, the news stops, and OGs sell just enough to make people doubt themselves. That's when the big money comes in. And once you know that, you can stop being scared of sideways trends and start seeing them as opportunities. This is where patience makes the difference between winners and losers. In every previous cycle, those who sold out of fear during the quiet phase missed the next big wave. People who had confidence and thought about things from the ground up, who looked at fundamentals, liquidity trends, and institutional behavior, were the ones who made huge gains that changed their lives. The movie is being shown again right now. Not much has changed since rates were lowered. The OGs are changing. Institutions are getting ready. Retail isn't calm. Here it is again, the same setup we saw before. As we move forward, it's important to understand the psychology at work. Be careful not to fall into the trap of boredom. Don't think that nothing is happening because prices are moving sideways. Because everything is going on below the surface. The pieces are moving, the players are setting up, and the stage is being set for a move that people will look back on and think was clear. Now we need to understand that crypto is not going by itself. It's part of the bigger picture of the world's banking system. It's important to look at the bigger picture when we talk about moving sideways, rate cuts, or OGs selling, markets for debt, movement of stocks, currency stability, and changes in geopolitics. These are the currents that move money, and crypto is set up to be the best way for that money to get out of the system when it gets too tight. First, let's talk about debt. Around the world, governments have high amounts of debt. Every year, the U.S. alone has deficits worth many trillions of dollars, and other developed countries are in the same situation. To pay for this debt, the government prints money, issues bonds, and reassures the market that everything will be okay. But what happens when buyers are no longer happy with bond yields? What do you do when profits are cut down by inflation? then capital starts looking for things that are harder to get. For hundreds of years, that valuable thing was gold. It's more and more Bitcoin and digital assets like XRP in the 21st century. After that, look at stocks. The stock market has been on an amazing run, which has been helped by buybacks and new money coming in. On the other hand, stock multiples can only go up so much when earnings and growth slow down. Investors look for different types of investments at some point. And crypto's unequal upside still gives us that, even at its multi-trillion-dollar value today. Add in stable currencies now. Yes, the dollar has been strong, but being strong also means there are tough times. That strength is terrible for emerging countries that have debt in dollars. Because of this, they have to find other options, and a lot of the time they choose crypto tracks. XRP is a good choice for settlement because you don't have to keep huge amounts of foreign cash on hand. That's the issue it was meant to address. Last but not least, changes in geopolitics. Global relationships are changing, trade routes are being redrawn, and people's faith in old systems is being put to the test. That makes it possible for a neutral, decentralized payment asset to grow. There's a reason why people are talking about central bank digital currencies, new ways to make cross-border payments, and blockchain rails at the same time that institutions are quietly increasing their crypto exposure. These different forces add up to one simple truth. It's not just possible for crypto to go through another explosive run. They are getting closer together in a way that is hard to miss. But most people who trade in retail will miss it because they are looking at short-term charts instead of big picture flows. This is what history tells us. During the boring parts of every cycle, the most money moves hands. Positions are made during the sideways grind, the chop that gets rid of weak hands, and the break in the news. Then, when the spark happens, a change in policy, the approval of an ETF, or a wave of liquidity, the market prices go back up quickly, and regular investors rush back in too late. The ones who benefited were the ones who paid attention during the quiet times. Remember the bubble on the internet? In the late 1990s, prices went through the roof and then fell back down. People were told that the internet was dead. But in the background, during that dull time, businesses like Amazon and Google laid the groundwork. After a few years, they ruled the whole world. The same thing is happening with crypto. The movement that moves sideways is the base, not the grave. Also, this is important. The story always comes after the facts. The move will already be underway by the time the media starts yelling that Bitcoin or XRP are necessary. Institutions will already be holding crypto when lawmakers finally agree that it is a strategic asset. Because of this, you shouldn't wait to see what's going on. You need to start from scratch. Look at how money moves and put the pieces together on your own. Let's talk about where this goes from here. If volatility keeps going down, institutions will move faster to get in. Sovereign wealth funds will give money out. There will be a dip in pension savings. Companies' funds will become more diverse. That's the next step. That's when the size of cash is much bigger than anything retail could ever bring. There are trillions, not billions, at stake. So the way the market is set up now, sideways, stabilizing, and taking in OG selling, is exactly what you'd expect before the biggest wave of institutional adoption. XRP plays a special part in this. While Bitcoin is the most famous digital asset, XRP is the settlement layer that banks are trying right now. It is made for speed, low cost, and easy access to money. Because of the sideways movement we're seeing, banks and payment providers are sure they can use it on a large scale. Adoption would stop if XRP was going up and down wildly, but this coming together shows that it's becoming the thing it was made to be. That being said, you need to pay attention to what people do, not what they say. Vanguard doesn't believe in Bitcoin, but they do believe in MicroStrategy. BlackRock warns of risks, but still puts out crypto ETFs. Ripple is being sued, but it keeps adding new partnerships and passageways. The chance lies in the gap between what people say in public and what's really going on behind the scenes. For those who are willing to look deeper, that's where the edge is. There's also the mental side of being patient. It's more likely for people to be bored than scared in markets. People are careful when they are scared, but careless when they are tired. They make hasty trades and chase after shiny distractions, and the long-term chance that is right in front of them is missed. People who can handle being bored and understand that sideways movement is just the coil before the spring will be on the right side of history. That's where we are now. Even though Bitcoin has gone up almost 100% in a year, some people still call it stagnant. People don't believe in XRP because the price isn't moving fast enough. Even though it has built one of the world's most important payment networks, that break in the signal is it. Opportunities arise when perceptions are different from reality. As we move forward, it's important to block out the noise and keep our attention on the small things. Rate cuts make money available. Assets with uneven upside get a lot of liquidity. OGs that sell small amounts make it easier for institutions to get in. Institutions are getting ready in secret, and taking steps in the background is what needs to be done before the next explosive repricing. You don't have to guess which day or week it will happen. You just need to know that it will. That's how each cycle has ended. It's going like that in this case. Also remember this, most people will miss it. They'll get bored, sell too soon, and look for other things to do. When they feel like coming back, it will be too late. Don't be that person, because it's clear where things are going. Whether Bitcoin is becoming the most valuable digital asset or XRP is becoming the backbone of global settlement. More people are adopting, more money is flowing in, and institutions are aligning. Things are getting ready for something much bigger than what we've seen so far.